Switch it up like it's about to go up, break them like internet. Goofies run up, we leave them in a dead.
You say, okay, I have a lot of money, but you have no money unless you take profits.
When the first ever spot ETF was created for gold 10x.
And the only thing I really knew was Bitcoin at the time, so I just invested very heavily into that. Rode it all the way up.
What's up?
My name is Jeff. Even the creators have said it's going to be the predecessor of CBDC.
What that taught me was that I need to be self-sufficient.
A solid DCA investment strategy, and pretend the red sell button doesn't even exist.
We about to go up like.
Oopsie daisy.
I was waiting for that beat to drop a second time.
Daisy.
That's so fire, you got to do it twice, man.
Yeah, yo. Oh, snap. Yeah, forgot to turn the loop off. All right, boom, we're live. All right. Yeah, I was waiting for that beat to drop again. Hey, thank you guys so much for tuning in tonight. Tonight we're going to be talking about Bitcoin, the recent drop that came through. We're also going to be discussing Shiba Inu's new Layer 2 blockchain. And then we're going to be discussing a little bit about the American household finances and a recent Fox News business report that came out showing how Americans are depleting their savings account. And I believe the study out of the San Francisco Federal Reserve stated that by the end of this quarter, a majority of Americans are going to have their savings account completely depleted. So that's what we're going to be talking about tonight. Thank you guys so much for joining. Remember, this show is not to be considered financial advice. All right. This show is not financial advice at all. This is financial entertainment. Anything we say should be taken with a grain of salt and taken as financial entertainment only. Make sure you guys like, comment, subscribe on the video. Check the descriptions. The news articles that we're going to be talking about are going to be in the descriptions below, as well as our Telegram link and all of our social medias. So make sure you guys click on that. Join us there. With that being said, QB Dub, Mr. Will Stevenson, what's going on, buddy? Let's see, you're in the truck. You're not in the shaggin' wagon tonight. So where you at and what are you up to?
Well, I just left Dallas, Texas a couple days ago. I've been on the road for the last 48 hours, something like that. I just got up here to the wonderful, beautiful state of Indiana. We're going to be doing some work up here. Got some FM radio to install on some tower just over by the Fort Wayne area, so just chilling around, getting ready to sling some steel, sling some stuff around, but just traveling the States. Nothing really new with crypto. This whole like Bitcoin craziness hit like as I was packing up everything, and so I was like, whoa, well, damn, my PC's down. All I got's a phone at this point, so I guess I'll just sit tight and watch the madness happen, because I don't really invest too much in Bitcoin anyways. But yeah, man, it's been a fucking ride over the last few days, but that's what's going on with me. Mr. Nate, what's up with you, bud?
Hey, well, working, right? Loading up that dry powder and getting ready to yeet it into the crypto world. So that's ultimately kind of what I'm doing. But yeah, again, we got a lot of different things going on with Tracker Jeff and I. We're actually kind of reaching our hands out a little bit, getting some feelers out, see if we can happen to get some guest stars in and everything as well. Starting to expand out, man. Like, we're looking to really actually have these deep conversations with not just us in the roundtable, but have other people as well, which would be really cool, right? So yeah, I mean, ultimately, we're just going to be going through a lot of different stuff, man. And I've got a little bit of troubles getting the recording from our recent DeFi Kingdoms recording. So I got it now, but we still have to cut it up and everything because it's just gonna be a little delayed, is all. But yeah, Brendan, what's going on with you?
Guys, ladies, thanks for joining. It has been a week. It's interesting. I've been in the market for a while. I've seen a lot of ups and downs. And, we had talked the last week and 2 weeks ago that we could see some more potential downside in the markets. And we saw that. In fact, it happened a bit faster than we anticipated. But crypto waits on nobody. So that's why you always have to be ready You always have to be watching, and you also have to have some powder on the side, if at all possible, for these downturns. I found a way to beg, borrow, steal some funds so that I could have some dry powder, and it worked out perfectly that I had a little bit ready to go when we saw this downside. Now, I have not, just aped all of my dry powder into the market. I nibbled a bit. Personally, I've just nibbled so far on Bitcoin and Ethereum, the two big boys. I maybe a little higher on Bitcoin than some of the other people on the panel and on the show, and that partially is just because of the scarcity. And, if institutions are going to be holding the power of Bitcoin, then I'm going to make sure that I have some. So that's that. Also, Ethereum obviously is great, but I want to put more money into the Pulse Chain network, and I'm just waiting for the right time to do so. Patience is a virtue, especially in crypto. And, I've also been doing some research over the last couple of weeks. We've talked about the perfect storm theory, but I've also seen some worries in the market that could delay that perfect storm theory from coming to fruition. And maybe we'll get into that a little bit later. So, yeah, some really interesting things in the market going on worldwide.
Yeah, Brandon, actually, I'd like to kind of just hop in there with that. With Bitcoin acting the way it is, that is a really big red candle, and that's something that you definitely want to be buying into. I myself, not so much Bitcoin, but I've actually been throwing a lot more into Ethereum right now. And, I'm the guy who's going out there to like Pulse Chain and Phantom and all those other ones, right? But yeah, no, I'm starting to put in quite a bit more into Ethereum right now.
We're starting to rub off on him. Uh-oh. He's starting to get a little financially responsible. Watch out.
On the subject of responsibility, for those of you tuning in tonight, you might notice that we have a new face among the crowd. I would like to introduce Mr. Zenith. He and I met while we were over at the CMC meetup over in Vegas, the crypto mindset course, folks, and we partied, we hung out at the swimming pool, we went to the whole event with Miguel and Charlie and everything, and hung out and had some pretty cool interview. But Mr. Zenith, tell us about yourself, man. What are you up to?
Hello.
What are you doing? Where are you from?
Good to see you, brother. I am currently residing in beautiful New Mexico in what is effectively the middle of nowhere. But it was a pleasure to finally meet one of the DGen Roundtable guys in Vegas. Granted, I met you when we were half naked in the pool, but still counts. So,
hell yeah, man! So how did you get into the crypto space? What was your in? Tell us a little bit about your beginning.
My beginning was back in 2021. I was looking to do some investment with some extra capital that I had, and I started looking into the stock market, and then specifically going towards trading options. And then if you look at the charts, January 2021 is basically when the stock market peaked. So I spent like year and a half trying to figure out how to do it. Ended up blowing up a small account, but then started looking at all the crypto folks and was like, I see the gains. I see the volatility. I think I can handle the volatility, and I'm here for the gains. So let's learn about that and get into it.
Hell yeah. And I think you, myself, and Mr. Taint here in the near future are going to be doing our own little DGen Roundtable insights to talk a little bit more about stocks and calls and puts and options and shorts and longs and all that stuff, because you seemed like, at least during our conversation, you are a freaking whiz at all that stuff. I don't know a damn thing about any of that. But Mr. Taint, we'll turn it back to you, bud. Yeah, no problem.
Yeah, man. Good stuff, Zenith. We're excited to have you here, dude. I don't know if anybody else on the panel got the opportunity to watch you and Will's conversation that he recorded. But yeah, it's definitely full of insight. And as soon as I saw it, I was like, we should definitely do a DR Insights and get this information out there, because you have a unique side of investing that I don't think too many people have. They don't quite have that experience. So, yeah, man, I think it'll be a pretty cool addition, and I think being able to put that information out will be pretty cool.
Looking forward to it. Happy to be here. I think one of the things that we talked about in the interview that no one has ever seen before is handling emotions, and boy, is that relevant as ever.
Oh yeah, for sure. Definitely. All right, let's. So typically we would do some TA at this point, but we look, guys. We talked about TA pretty much all week. We did it a somewhat of an emergency live stream. I don't even know if we considered it an emergency live stream, but we did a live stream in the middle of the week. Jay hopped on talking about Bitcoin, and we took a look at the Bitcoin chart. Nothing's really changed. It is where it is right now. Brace yourselves. There could be some more volatility to come. There's nothing saying that this is going to stop it, but there is also no real news out there saying that it's going to continue to fall. So Bitcoin typically follows the path of least resistance. And if we just had a huge sell-off last week, then that's typically where the least resistance is going to go. The market seems to have flipped bearish. So if you guys want to take a deep dive, take a deep TA look into it, just go back into our video that we did earlier this week after this show, or you guys can pause the show or whatever you want to do. But let's go ahead and hop right into the first news story, and we will rock and roll with this. So that's actually going to cover our very first topic that we're going to be talking about tonight. So CoinDesk came out with an article this week talking about no, Elon Musk's SpaceX is not the cause of the multi-billion-dollar Bitcoin bloodbath that just occurred. So there was a little bit of speculation that Elon Musk had sold off some of the Bitcoin that he had. The article goes into detailing how more than $1 billion total in the crypto futures were liquidated during this week. Some pointed to SpaceX supposed sales. The article goes in talking about how Elon Musk had written down the Bitcoin that was owned in 2021 and 2022, and that those coins were sold, but it's unsubstantiated. There's nothing saying that Elon Musk or SpaceX sold any of their Bitcoin. What the article goes on to say is professional traders believe that it's market structure and liquidations that were the reason for the drop. Now, if we think about this, since November of 2022, when we got what most people would think would be the bottom of the bear market in, Bitcoin longs have been increasing at a steady pace. All right. Now, there has been a very recent influx of shorts on Bitcoin, betting against the continual price increase on it. What I happen to believe, I think probably what Jay would believe also, being a TA individual, is there is some very strong hidden bearish divergence on the Bitcoin weekly chart. And for any traders out there over the last week or two who have been looking at that sort of thing, they could see that there is defined hidden bearish divergence. And they probably went in and put in some shorts on Bitcoin. Hidden bearish divergence is usually a pretty solid indicator that price is running out of steam, that the strength index is trending downward, and that price will soon follow. There's nothing saying that that's it, but that's what the article is alluding to. And then once the price broke down below 28.5, that led to volumes of longs being liquidated. It caused a cascading event of sell pressure that was applied to Bitcoin, causing the prices to drop. And the article goes on to mention rising U.S. interest rates and the funding rate as also possible solutions or possible reasons for the sell-off. Brendan, I want to bring you in here real quick. Do you think that this theory is the most reasonable, or do you believe that something else contributed to the sell-off that happened this week?
Well, the first thing that I want to say is FUD, fear, uncertainty, and doubt. You know, when we saw a bit of a downturn with Bitcoin, we saw all of these outlets coming out and say, oh, SpaceX sold all of their Bitcoin. Elon is no longer, holding any Bitcoin in his company. That's, sell. Well, if that's not true, who's it coming from? It's coming from the bears that want the market to have a downturn. And I hate to break it to you, but, there's still a lot of institutions that need to buy Bitcoin at a lower price or want to buy it at a lower price before the United States approves the spot ETFs. So is there a little bit of a game being played within the market? So the first little bit of downside, yeah, right. That happens. Crypto is volatile. We know that. But then when the fear the uncertainty and the doubt hits the market when people start to put in, which we call FUD, essentially fake news. Elon sold all of his SpaceX Bitcoin. That now drops the price much further. And so it's very interesting to see how the markets work and how much they work and how fast, especially in crypto, that news can affect price. And so I think that overall what you said, Josh, is true, but that we also have to take into consideration that, when there's bad news in the market, especially when Elon's involved or his name's attached to it, or SpaceX or Tesla, or, anything that has to do with Elon, people tend to be their ears tend to perk up a little bit more. And we still have a lot of uncertainty in the markets worldwide. And so it doesn't take a lot of fear being inserted into the market to drop it lower. And I think that fear with Elon and SpaceX was part of the problem and why we saw it tank a little bit faster than we had originally anticipated.
That makes sense. I'm a very analytical person. So, when I started seeing that hidden bearish divergence, I was like, oh, okay, here we go. It's well-defined. In the past, when we see something like this, especially on the weekly chart, price seems to lag behind the strength sentiment, and then a sell-off isn't very far along. But when you think about it, the cascading price, it sort of does make sense. So, and this is typically true in any market, where if you get a lot of long position, if you get a lot of longs that begin to stack up over time, all it takes is a couple shorts to come in. And I'll explain it real quick. So pretty much, if you bet long on Bitcoin, what you're saying is, hey, I bet down the road Bitcoin's price is going to increase. So you take out what's called a long position. A short position is the opposite. Hey, I think Bitcoin's going to go down in price, so I'm going to take out a short position, and I'm going to bet that Bitcoin is pretty much going to go down. We'll save the techniques for that and stuff and all that stuff for DR Insights, but that's just the relative spin of things. So when you see a vast and a quick influx of shorts coming into the market, starts to puzzle some people. And then usually all it takes is one big influential player to come in, see that there's something going on in the market. Plus, Jay was saying 2 weeks ago that, these Bollinger Bands are starting to squish Bitcoin, and Bitcoin is starting to get to a point to where it's going to have to make a decision. And I actually have that clip pulled up. I'm going to play that, but I want a little bit of our conversation to ensue a little bit. Nate, Zenith, you guys can come off mute if you want to. Are there any other theories out there? I mean, do you think anything else contributed to this, or, is what the story saying? Do you think that's the most rational, or do you think it was something else? Could it be something else that we're not thinking about?
I'll hop in here for a second.
Yeah, you go ahead.
Thanks. Sorry, not trying to step on any toes. So when it comes to another factor that I think led to this bit of a movement is the fact that we had been sitting around that 30,000 level on Bitcoin for so long. If you look at the chart, we've been there for over a month effectively. The way that the futures market works is that it is a little bit ahead of the market on its own, but it also has its own expiration dates with the contracts that it has. Because we are sitting at that 30,000 level and we're actually slowly grinding down over time, what that was doing is creating a lot of negative EV on those futures contracts, which leads you to want to sell before the contract actually hits the expiration date or the exercise date. And at that point, you've basically just lost a bunch of your equity. So because we are grinding down slowly over such a long period of time, all the contracts were maturing, and that's what was starting to cause some of the sell-off with the futures market. After that, a lot of the players that are involved in the futures market are also going to be some whales a lot of the time, which means that they're also going to be selling off positions, maybe to cover some losses or liquidations, because everything is run on Bitcoin on these exchange markets online. So that's my theory on it.
Yeah, that's actually where I was going to take it right there, was simply it's a cascading effect, right? So once, something like that happens, right, with all the liquidations and all that, it starts going down. And obviously, I'm not as technical when it comes to like the charts and all that, but basically for the normal guy, it works like this, right? The liquidations start making the price go down. Well, once the price starts going down, then what happens? Well, people start kind of getting a little bit of a panic going on, right? It's like, stop loss, right? And people start, people start selling and selling. So I think a lot of this is this is the reason why you have resistance on charts. And hilariously enough, we have stopped and we're actually starting to go up a little bit on Bitcoin now as I'm looking at the charts, and we hit resistance. Bam. We'll probably start going up from here. I'm not going to lie. But here's the other thing that I've been kind of noticing, and this is kind of to Brandon's point. Right now, where we are at in the market, if you're looking around, is simply rumors. There's not a lot of things actually happening. You know, there's a lot of like, hey, we're thinking about doing this. Hey, we're planning on doing this. Hey, we're applying for this, but there's nothing actually happening yet. And so right now, what the market is doing is being highly speculative, right? And if you're looking in the history of the charts here, that at least what I'm seeing is that there's a lot of bullish speculation where Bitcoin continually is going up. And then all of a sudden, hey, we get a big drop. I would almost call this the biggest drop since, quite frankly, it was the middle of the bear. And these are going to need to happen because, quite frankly, people need to get a dose of reality, right? And I think we haven't really had that dose of reality yet. So, yeah, that's kind of my thing.
I think that it's all just a bunch of magic. So as I was reading the story, the article thing, they were talking about like, oh, it wasn't Elon Musk, it was this, that, and the other. It was yada yada, reason XYZ 1, 2, 3. And I've learned through the years of fucking around on the internet that basically like anybody can write words on the internet and post them, and I don't understand half what the shit that they're talking about. So even if what they were saying is true, it's all mumbo jumbo to me. So I just like that one funky guy was saying on our last thing. It's just a bunch of knuckle bones being thrown at the board, and then people predicting futures. But it's like I don't know what causes the whole thing to go down. But your guys' explanations sound pretty good. I don't understand them anyways, so it's all just magic. So I just cross my fingers and hope.
Hey, I just real quick I had to turn my fan on. Do you guys hear any feedback or anything on my microphone right now?
No, I just hear a beautiful, sultry voice.
Buttery. That's all I hear.
Buttery. I like that. All right. Yeah. I'm going to go ahead and play this clip from Jay 2 weeks ago. So this was 2 weeks ago to the date on the pod, given his TA, and just, he predicted this exact scenario. So just give me one quick second here. All right, here we go.
Also, talk about volatility, right? Bitcoin is once again, this price moving sideways is coming up against a rock and a hard place, right? If we let's move this retracement here just so you can see it a little bit clearer. Let's turn off some of these indicators just so that it's a bit easier for you guys to see. If you notice, right, if we were to be a bit more generous with this trend line here, right? Bitcoin is moving sideways and it's coming up. It's going to be pinched by that downward sloping trend line and this long-term upward trend line that we've formed since the beginning of the year. So Bitcoin is going to get pinched here, and depending on how the overall market is looking within the next week, we're probably going to experience some kind of significant volatility, right?
Yeah, so that came straight from Jay. I absolutely love the fact that Jay comes onto the show and all the time predicting solid stuff. Let's keep the conversation going. So another question that I want to ask. So Brendan, come in here again. What are the importance of zooming out? So, anybody can take a look at this and, they can get fearful, but what are the benefits of zooming out and identifying, exactly where we are in the market and how short-term action shouldn't mess with what your long-term investment goals are?
Yeah, it's a really good question. We had a bit of a live stream, as you mentioned earlier, in our Telegram group. So make sure you join our Telegram chat. It's free. A lot of information in there. You can ask questions. But Jay, Josh, and I had a live stream right as Bitcoin was crashing to give you the information before anybody else got it. It wasn't a video uploaded on YouTube. There wasn't even a tweet about it, and we were already live giving you the information, showing you the details, showing you the charts. And that's what we are trying to provide, real-time information for you, so that first of all, you can understand what's going on. And second of all, you don't get the fear that we've experienced in the past when we were new in the crypto market. And, when you see these short-term dips, these short-term chart problems, we tend to be feared. A lot of people sell red and buy green, right? If the market's going down, they're afraid and they want to sell everything so that they don't lose more money. And as they're seeing green candles, they want to buy because they don't want to miss out on a potential big gainer, right? And this is the opposite of how we should really be looking at markets. That is literally just your emotion causing you to make trades, be it on the downside or be it on the upside. Now, we know that's very real. FOMO, especially on the upside on those green candles, is very real. But what you need to do as someone that's either new or seasoned to the market is you have to zoom out. You have to say, okay, this is 1 day, this is 1 minute, this is 1 hour. What is my financial plan? What do I see the market doing long-term in the next 1 month, 3 months, 6 months, year? I actually have a plan. I tell everyone that I have an 8 to 10 year plan when it comes to crypto, because that's probably going to be 2 full cycles, right? And so when I talk about having an 8 to 10 year plan, I should not be fearing too much in the 1 or 2 hours or 1 bad day or 1 good day, because we are important is for us to zoom out and look to the future. Where do we expect these markets to go? And if you expect the Bitcoin market to increase as futures get approved, as our economies potentially approve in the next couple of years, well, we can see a lot of influx of money going into the crypto sector. And therefore, it's really that 2 to 4 year plan moving forward that really should be your focus. And so if that's your focus, then what your short-term goals should be is, hey, where are my buying opportunities? Where's the opportunity where I can get to the market to be able to make the most X's moving forward? And honestly, this dip, I think, is a really good opportunity. Not that we might not see some more downside, but that's why we also always talk about, slowly investing your money, unless you're McApe it. But I slowly invest my money. I put in about 10 to 20% of my funds into Bitcoin and Ethereum on that first big dip. And now I'm kind of waiting to see. I'm thinking about putting a little bit more money in over the next day or so, just in case we start to see an increase. But overall, I think that there could be a potential for more downside. And therefore, I've learned to be patient, to zoom out, and to let the market react so that I can then, adjust my plan to what the market is telling me. But my goal, in my opinion, is that I trust Bitcoin, I trust Ethereum, and the coins and the projects that I truly trust, these just become buying opportunities for me because I have a much longer term view than a lot of people. But that's also why you can't, over risk your portfolio with money that you can't afford to lose in the short term.
That's 100%, Brandon. When you're talking about, having that long-term plan, right? Mine is not like, I have one that's actually for the next cycle, right? But then also the end of this bull cycle, right? And so here's the interesting thing, as you were talking about, to reiterate, right, is that when you know that you've got a certain plan that, hey, this is where I'm going to be going with it. I have a lot of money that's just kind of stored away right now, or coins specifically that is stored away. And when I start seeing these drops and pumps and things like that, I literally go, okay, cool. And it doesn't matter to me because I've already made up my mind that if I am going to be selling anything, I'm going to be selling it in summer of 2025, maybe going into early 2026, right? And I've already made that decision. And so I'm sticking to it. I don't get emotional over these things. I see Bitcoin drop like that and I just start laughing my butt off because I'm like, hey, look at that. I can buy more, right? And then it's kind of funny because when I start seeing it go green, I'm like, I hope it continues to go green, but I don't know if I really want to buy that, That's the way that I view it. And the reason I'm viewing it that way is because I have that plan of, at the very least, right, 2025, 2026, right? That's where I'm going with it.
And correct me if I'm wrong, Zenith. I'm going to make a statement here, but you being the individual that knows a lot about futures and such, As Bitcoin continues to be adopted, I mean, this sort of thing is going to happen more and more often. We're going to get more and more futures contracts into the markets, and those expiration dates are going to continue to cycle and stuff like this. So as we get farther and farther down the road, I mean, it's not even anything really that's out of the ordinary. The volatility that happens in the crypto spaces is already tenfold more than it is so in like the stock market and such. But when you think about Bitcoin adoption, as more and more people adopt, as more and more institutional money comes in, we're going to see an increase in shorts. We're going to see an increase in longs, and we're going to see an increase in those options tradings and futures tradings and such. Is that correct?
The answer to that one's going to be yes and no. So on one front, the more people that you have coming into the market means that you're going to have a larger market cap. So it's going to be harder to move things up and down. But at the same time, there's lots of things that are in the works right now. So obviously, we already have Bitcoin futures. We're trying to get spot Bitcoin and spot Ethereum ETFs in the future to trade on stock market. That's just opening it up to so many more people. And it's also opening it up to be leveraged. Honestly, everything that's going on with options and futures, it's all fake Bitcoin. It's like paper gold effectively, which the ironic part is that this is kind of counterintuitive to the whole point of Bitcoin and cryptocurrency, which is that you can't fake it. It's a non-fungible token. That's the whole point. But at the same time, though, if there are people that are willing to play in the leverage casino, which is what futures and options are, then yeah, it's going to be able to allow people to leverage their original positions, trade more than they possibly have, and then also get leveraged out if they get liquidated. So,
Zenith, actually, to add on to that, that was something that I was thinking about not too long ago, especially when BlackRock was all like, oh, yeah, we're going to be going and doing this Bitcoin ETF. I was like, technically speaking, like, BlackRock are the ones that own it, and then they give you, as you say, paper, right? It's kind of like, here's an IOU for how much Bitcoin you have, right? I was kind of thinking about that. I'm like, this is how you're going to onboard people, yes, but at that point in time, what you're going to be getting then is not necessarily these people actually buying the currencies themselves, right? The cryptos themselves, but you're going to be getting the large companies buying it all up. And I think that's kind of the that's kind of the psych out, right? That is, or the psyop that's maybe causing people to be a little bit too bullish on the whole ETFs thing, Although, having companies buying it all up like that is pretty cool. But this is the reason why a lot of our the perfect storm theory that we've been talking about is actually basically these companies are purposely trying to bring the price down to be able to get it as cheap as possible, right? And then they can buy it up as much as possible. So that way, as soon as basically these companies do let it shoot off, right? Governments and companies let it shoot off to the sky, then it's really going to get moving, but it's not going to be your normal person coming into the cryptocurrency space and then making a ton of money off it. It's just simply going to be, hey, here's an IOU, and now you're a part of crypto.
You're not wrong. When it comes to the futures and the options and stuff, you got two options. You can either trade the underlying asset, or you can go for a cash settlement. A lot of people are just going to be doing the cash settlement option because when you're trading a futures contract, for instance, you're effectively trading 5 Bitcoin at a time. I don't know about you guys, but I don't exactly have enough dry powder to just buy 5 Bitcoin whenever I want. So yeah, it's a way to leverage more than you have. And at the same time, having these abilities to affect the market in the ways that they do by big players like Vanguard and BlackRock, yeah, it's going to affect the market a little bit. But also at the same time, these guys are so big that they can use their bag of Bitcoin to effectively operate their own exchange through futures and options trading. Because at the same time, you're going to be hitting traders' fees. You're also going to be liquidating people at certain points. So it's just a way for them to honestly make an additional revenue stream on top of sitting on Bitcoin, which is going to be a revenue stream on its own.
And what is that exchange going to be? Base. We got Coinbase, right?
Yeah,
Coinbase. Very interesting how it's all wrapping up together, huh?
The one thing that I have to say about Coinbase is that I think Coinbase is going to be the foot in the door for a lot of traditional finance. Coinbase appears to be the people that are talking with lawmakers and regulators to actually try to create some crypto regulation here in the U.S. And they are first to market and largest. So that's absolutely something to be said about the amount of pull that they have.
Hey, Brendan, you're on mute there.
Zenith, I have a couple questions for you. So I would never be a degenerate on the degenerate roundtable, and I would never ever leverage trade. Never would, ever. I would never recommend it, especially. But if I were to have in the past leverage traded, maybe up to 10x leverage on a platform like KuCoin. Well, KuCoin now is making me KYC, so I can't be a degenerate the way that I have in the past. So, do you have any platforms or any ways that you degen short or long plays currently?
Right now, I got to tell you, I have not touched leverage in a hot minute because it's some of the best advice you're going to get is stay away from liquor, ladies, and leverage. Leverage is really just there to wreck you at the end of the day, especially with crypto, which is such a volatile asset. Like you said, once you start trading a lot of leverage, like 10x, that means all it takes is necessarily a 10% drop from your original position just to get margin called and then eventually get just liquidated out. So there are some platforms that do it. None of them are located in the United States right now, and that's purely just because of the regulation stuff. One of the ones that I think there's some in Panama right now. Panama is a country that appears to have a few different crypto platforms that are going on. But like you said, one of the things that a lot of people try to avoid is know your customer, because that's how you get true decentralized finance. So there are platforms coming out in the future. I want to say, what is it? Fiat and Fame. Those guys are trying to create their own exchange on Pulse Chain. That's something that they're working out. That project's coming out in the near future. So that's probably going to be the best bet if you want to avoid KYC stuff. But other than that, you're going to be working with companies that aren't in the US, might not be the most reputable, but at the same time, it's still just leverage trading. I don't do it myself anymore. I'm a proud hodler now. I option traded stocks for a year and a half, and I ended up just net zero. So all that sweat and effort was not really worth much.
Yeah, I agree with you. And again, I really don't do it. I do it with very small amounts of money just to practice my chart analysis and my market. And so I use it as a tool where I can maybe just use a little bit of money and sort of practice in the short-term trade game. And yeah, like you said, super volatile, super risky, and not recommended. The other thing that I would like to just mention, and maybe you can touch on this as well, is, as institutions have a little bit more control over, the Bitcoin and the Ethereum market because of the potential ETFs in the future, the spot ETFs. What does that have to do with altcoins? And is that really where our opportunity to make more X's are in some cases because they don't have as much control of the market?
So when it comes to altcoins and this sort of stuff, a lot of times you're not going to find altcoins that are being leverage traded like in futures and options. What you're going to see is a lot of the blue chip stuff. There are people trying to create some projects out there that allow you to do a little bit of this sort of trading with altcoins and then to do liquidity pools. I want to say, what is it? 9inch is currently a project that's trying to do that right now. So, I mean, yeah, at the end of the day, though, the altcoins are all going to be affected by Bitcoin and Ethereum. Bitcoin leads the market in everything. It's widely apparent. Everything correlates to Bitcoin in the altcoin world. So, sure, once you start trading the futures and whatnot for Bitcoin, you're going to be affecting that price a little bit more. In turn, you're going to be affecting altcoin prices a little bit more. And then also, just to touch on one of the things you mentioned previously, DRT.14, I believe, is one of the platforms that actually allows you to do options, perpetuals, and futures. And they even have a fake trading account that you can open up so that you can, like you said, practice your chart management and looking at support and resistance and try to test out some theories yourself without actually having to risk any money.
Yeah, and here's the thing, though, too, to just kind of add on to that. Crypto itself is already leveraged, right? Because it's already so volatile. The only reason why leverage trading really has ever become a thing is because in the stock market, being able to get actual gains, right, you are going to need the leverage trade. And ultimately, these companies, it went up 10%. Yay, I made some money. Oh, cool. Sure, we don't get out of bed for a 2x over here in crypto, right? So how are you going to get that? How are you going to get a 10x, right? Well, you're going to have to leverage that particular stock. So because old finance, traditional finance is so used to this is something you have to do, the idea of something that's so volatile that you don't need to do the leverage trading it just doesn't click in their heads. Right? And so all these leverage experts who are like insane on the technical analysis and all that, they know exactly what to do, and they made, you know, millions of dollars doing it in the stock market. They're like, hey, this crypto thing is so much better. I can get like hundreds of X's instead of just like maybe like a 5X, right? And they start coming over here and they get wrecked. They get wrecked because they don't understand that they're leveraging something that's already leveraged. So it's just they don't understand. And not only that, but crypto moves so ridiculously fast that ultimately they just, oh man, they get spanked.
Hey, Zenith, quick question for you. I got two of them. The first one I want to ask is switching to being a hodler now. You said you hodl now. Has that like de-stressed your investment strategy? Like, I mean, do you feel more confident in that strategy? Like, how is your mindset now versus when you were doing the options and the futures and stuff like that?
So when it came to trading options and futures and stuff, a lot of it was trying to do chart analysis. At least in the world of stock trading, you look at the charts and you try to identify boxes. You're specifically looking for areas of support and resistance where the price stays between, and you're trying to find those breakouts, because the stock market really works in a few different ways. It's either chopping sideways, or it's trending up, or it's trending down. The idea with the options trading is that you wanted to try to catch it on on any of the trends, whether it's breaking out of a box and going to the next support and resistance, or doing the opposite and just dumping. That's where you short it. As far as the hodling goes, yes, I'm very, very happy with this decision, because my goal when it comes to my personal goals are to build wealth over time. I'm not trying to make money in the next like near future. I'm trying to set myself up for 20, 30 years from now. And the goal with that was, sure, you can invest in the S&P 500 over time and just keep chipping in and in and in. However, if you look at it historically, it's only done about 10% on average year over year. And if you look at a lot of current data, it's actually starting to slow down. We're starting to get diminishing rate of returns. And when you start looking at other things like the inflation in the last 2-3 years, even going up to 10%, you're effectively just saving money there. And then sometimes you're not even going to beat the inflation. So when it comes to crypto, if you understand the 4-year cycle and you have the stomach for the volatility and you have the ability to create systems to remove your own emotion from it, you can start stacking those coins over time. And honestly, I think we're still early to the market. We are still not even widely adopted in anything. There's tons of use cases coming out. Going from Bitcoin as just your gold standard and a store of value to Ethereum to actually having all the smart contracts and things that you can build on it. It's the evolution, and it tells me that there's a long way up to go from here. And I think that this is going to be the next escape that honestly boomers probably were experiencing when they found the stock market back in the 60s, 70s, and 80s.
Cool deal. And then the last question that I have for you, if you could just speak on how futures positions for or against the market can affect the price. If you could just speak on that real quick.
Yeah. So like I mentioned previously, when you're trading futures, you're effectively trading 5 Bitcoin at a time. So you are controlling a little bit more of the Bitcoin supply in and of itself. You might not be able to directly affect the supply with your trades. However, like I mentioned previously, a lot of the people that are trading futures are also heavily invested on the other side, which is the non-leveraged bits. So it's a way of looking at sentiment in the market and seeing where it goes.
Good stuff. I don't know if this is a live sub or if it turned into a special guest with Zenith, but
I'm just here to hang out, boys.
I'm going to give the panel another round if they want to ask another question or two. This is fascinating. This is awesome. And then we'll transition to the next topic. But Brendan, Nate, Will, did you guys have any final questions before we transition?
More like just a statement. Ultimately, when it does come to like leveraging and all that, the important thing to understand is that this is going to be the future of crypto, because there are way too many people, like I was already talking about, who are way too used to it. They have to do it, or at least in their heads, they think they have to do it. They don't understand that crypto is already leveraged by itself because it is so volatile. So yeah, it's just, that's ultimately what is going, as far as like perfect storm theory goes, right? And that is what's going to be happening to help pump up and have these severe drops though as well. And actually, Brendan, I got a little bit of a question for you. What's your thought process on the leveraging of crypto causing things to be even more volatile than we originally would have maybe thought, right? Because all we've been seeing off of Bitcoin so far has been it's been slowing down. It's not as volatile anymore, right? But with all of the leveraging that's going to be coming into our system, do you think there's a possibility that we're going to go right back to the beginning where it was absolutely freaking crazy?
No, I mean, I don't think we're never going to get to that point of volatility with Bitcoin. It's just becoming a mature asset, and mature assets just generally don't have that same volatility. And like you said, institutions aren't going to leverage trade. I hope institutions aren't going to leverage trade Bitcoin. We kind of saw that happen with FTX and Alameda Research. They got wrecked, literally wrecked by leverage trading. That is how they liquidated all of the funds that weren't theirs to begin with. And so, no, I mean, I think that anyone that is reputable, anybody that understands what they're doing isn't going to leverage trade the same way that they would in the stock market, like you talked about. And we will see a little bit more, I think, playing within the market by institutions, right? Because they'll be able to control stuff a little bit more with their shorts and longs. But it's not going to be the same way as sort of just becoming a degen trader with, far too much 5x, 10x. And, we'll see. But no, it's how Alameda Research literally got, I don't want to say this online, but they literally got fucked, and everyone with them, because they were just playing stupid games. They were so bullish on the market that they longed with leverage so much money, and they got absolutely wrecked. We don't recommend it. I joke about it, and like I said, I do. If I don't have skin in the game, I'm not going to play as hard, and I'm not going to learn as well. So that's why personally I may leverage trade here and there, very small amounts, because if I'm not using real money, I'm not going to make real moves. And that's just me personally. And so I'll take that money that I make or lose just as a lesson, but no one should be really trading any of their bag on a leverage way. That's how you lose trillions of people's dollars.
Will, you got anything?
That just sounds like fancy gambling. I mean, gambling sounds like fun, but I'm just absorbing information, man. I don't really know what a lot of these fancy words are that you guys are using with this this longing and shorting, and like I understand the concept, but I think I might have to give it a try. We're talking about not being degens, not being degenerates. I've tried the ladies, I've tried the liquor, I haven't tried the leverage yet, so I might just have to dabble in it once or twice and see how fucked I can get myself here. But no, that's all I got.
Sometimes you got to get stung a little bit before you realize what's going on. All right, let's go ahead and transition. Nate, I'm going to turn the floor over to you. Let's talk about this new Shiba Inu blockchain.
Alrighty, so Shibarium. Whoa, here we go. I think it was kind of unfortunate that they launched right about now. Man. So let's start it from step one, right? So get my notes up here. So Shibarium, right? It's the L2 on Ethereum. It's made to literally help Ethereum, help out with the gas fees, help take some of the pressure off and all of that. It's ultimately just the the Shiba Inu coin, right? That meme. The community is so strong that they created their own L2, and yeah, hilariously enough, they actually waited for 2 years for this thing to actually launch. And when they did, they ended up with problems. And it's so funny because it reminds me so much of Pulse X, because we waited 2 years for that one as well, right? And and then when it launched, our bridge went down and all that. And oh man, and then on top of it too, when the Shibarium launched, they launched it right when Bitcoin decided to make its major dump. So now everyone's scared, right? Man, I don't know if that's just bad luck or what, but it's kind of entertaining, not gonna lie. So I think it's interesting that the creator of this his name is Shitoshi, right? It's kind of like Satoshi, just like Bitcoin, right? And I could see where they were trying to go with like, hey, we got a Bitcoin-like asset. that we're turning SHIB into, right? Ultimately speaking, though, I kind of see like the ideas that they're doing, but at the same time, it's I almost at this point I almost feel like they're literally copying Hex, because if you look at Pulse Chain and Shibarium, they're the exact same. Pulse and Shib are literally the exact same use cases and everything. There's a buy and burn for bone and all that. For actually, it's going to be a buy and burn for Shib specifically, kind of like Pulse, right? But on Pulse X, it's specifically the Pulse X coin that it's buy and burn, whereas on the normal one for SHIB would have been the bone for bone swap, but instead they switched it over to the SHIB coin. It's a meme coin, guys. I don't really think it's going to be absolutely amazing as far as like build outs go, but here's the thing: they do have a lot. See, I don't think I actually no. Okay, so I didn't actually write down specifically who it was, but I do know that they have several people right now, bigger institutions that do want to actually start building on Shibarium, and so they're already like lined up, like scheduled to start building things. And I'm a little bit iffy on how bullish I am on it, but in looking at SHIB coin itself, I do own some. I bought some more. Yes, and overall, I do feel like this is something that could go somewhere. There's enough traction, and there's enough people that really, and we all know how the community really does truly drive coins, right, and ecosystems. And there's a big one with SHIB, and so the idea is always like, what is it going to be? Is it going to be Doge or is it going to be SHIB, right? Well, at this point in time, I'm kind of looking at it like SHIB is Ethereum, which you can build on, and there's multiple different things going on. Whereas, say, Doge is just going to end up being a kind of just a store of a store of value, and it's kind of like a Bitcoin, right? So yeah, that's kind of what I've got on that. It was a very interesting thing. I do find it very funny how a lot of the community, their sentiment is quite frankly just, oh no, it messed up. Blah. Oh well. And yeah, Will, you and I were talking about specifically how they messed up. Do you want to introduce that one, or do you want me to talk about it?
Well, so I wanted to just ask you about it. So
Yeah.
my
Okay.
understanding, because I had kind of sort of read about this, but you explained it to me in a little bit greater detail. My basic understanding is that they had a whole bunch of assets. I think it was Ethereum, and they went to bridge it on over to their Shiba Inu chain, or their Shibarium chain, their L2 whatever. And then when they bridged it over, they lost it. It's like, oh, where did all this money go? Where did all this value go? So that's not really a good step one for the devs, for the community, for the leadership, for the nobody wins except for you and me sitting behind it in a glass box, sitting and laughing and looking. I guess it's kind of useful if all that Ethereum's gone, then that brings down Ethereum price a little bit or something like that. So, or it makes Ethereum more valuable. Excuse me. But yeah. So Nate, can you explain like sort of kind of what happened in that?
Yeah, okay. Oh man, you want to talk about like this is the worst thing to have happen. Now, okay, so it's really funny. Just a quick story. I actually own some of this. 9inch is a DEX aggregator, I believe. That is they gave out a free coin for people who sacrificed for it. I happen to be one of them, and this coin is literally called "Where Did All the ETH Go?" So meme, hilarious, funny. But then I find it so funny that that's what they named that, and it happened. They gave it out just a couple of weeks before Shibarium then launched, and then of course a bunch of people bridge over the ETH, and it just poof gone. It was like 2.5, 2.1 million, somewhere in there, bridged over ETH, and it's gone. And everyone's like, hey, where'd it go? And I was reading up on a thing where the devs themselves were looking into, and they're like, we have no idea where it's at. It's stuck somewhere, but it's stuck somewhere in the ether. It just kind of like poof is gone now. So where'd all the ETH go, I guess? Oh man, it's I feel bad for these people though. I'm not gonna lie. Like, you wait so long and then you throw like five Ethereum at it. And you're like, yeah, awesome, let's go. And then where did my money go? This reminds me actually what Billy did, right? He sent over a lot of money over to liquidity pool, but he didn't test it first. Guys, this is just another example as to why you need to be sending some test transactions with brand new things. Yeah, okay, cool. They've been working on it for 2 years. It should work, but I mean, is it really worth losing $10,000, $12,000 worth? I mean, come on, guys. It's not cool. Not cool.
I got a question, and I'm going to throw it out to the entire panel if anybody has any thoughts on it. It seems like every coin and their mother is coming out with a blockchain. I think the article says that there are over 50 either layer 1 or layer 2 networks now. So the field is getting more crowded when it comes to blockchains. This specific coin is said to have a focus on the metaverse and gaming applications. So could something like a Shiba Inu based blockchain have any sort of strong impact on the metaverse or gaming side? Could the name alone and its reputation carry it to make it successful? Or, what do you guys think on that aspect?
I think it's possible. I think that the metaverse is that's all like the Facebook, the Sand, the Illuvium, the Matic, or not Matic, excuse me, Mana, Decentraland, all that crap. It's just like the virtual reality stuff. I'm not sure what exactly Shiba Inu has planned to really like start digging out their own little hole in this realm. But if they can figure out where their money went first, and then from there figure out how to do some more stuff in the metaverse world, that'd be pretty neat.
Well, here's the thing that I'm looking at, right? Shiba Inu, that's a meme, right? It's a dog meme. It's the same type of thing as Doge, right? Doge was ultimately a gamer's meme, right, from the internet. If you look at what Shiba Inu technically is, it's just nothing more than a meme with a strong community of, quite frankly, memers, and the memers are going to be the gamers, right? The gamer world. And so, yeah, I haven't really heard too many rumors that GameFi is where they're going to want to focus, right, for now. I think they're just trying to do decentralized exchanges and stuff like that, right? Just kind of like the normal thing. But I can see that the GameFi realm is going to be the place to be for sheep. And it's quite literally just because, hey, this is some gamer meme stuff going on over here. Let's go build it all over there, right? That's what I'm seeing.
Can I ask you a question? If a coin is top 15 in market cap, both SHIB and Doge, is it still a meme coin?
No, it's a shit coin.
Serious. I mean, what are we in the market for? We're in the market to make money.
Exactly.
I mean, I don't know. I don't even know if Doge and SHIB are meme coins anymore. That's how they started, but honestly, I don't know if I can classify them as meme coins anymore. They have literally solidified their place among top 15 coins in all of freaking crypto. I mean, that's insane to think that you just built a random platform for fun, a random coin for fun, and you became a real coin. Now, that's the question. Is it a meme coin? Is it a real coin? And will that continue in the future? Look, I get that SHIB wants to create more value and grow bigger because, as you say, what is its use case? A meme coin is just a random coin that has no use case. It doesn't really have a use case except to make you money. Now they're trying to create a use case for SHIB and really differentiate from other dog coins, other past meme coins. And look, I give them credit for that. But do I trust a team that just created a meme coin for fun? It blew up into now a solidified big market cap coin. Do I trust their development? And then you come out and you right off the rip after 2 years of development, you lose $1.7+ million worth of users' funds just because they messed up. And literally one of their developers tweeted, yeah, sorry, we really messed up. I don't think we can get your funds back. Now, maybe they have enough money because they've become a solidified blockchain to get people their money back, even if they can't recover it, right? So maybe they can do the community a positive, especially these first people that are really trying to build and to put money into the Shibarium universe, and maybe they'll do best by their people. But one, I don't know if I can call it a meme coin anymore, and two, I still don't. That doesn't mean that I can trust it with their development moving forward. So it is interesting. I think there's two sides to it. I do respect them for trying to differentiate themselves in who they are. I do want to say though, I believe Pulse is vastly different than all of these other 50 blockchains trying to reduce gas use to Ethereum, because it literally is a fork. None of these other layer 2s are forks of the Ethereum blockchain. And so therefore you can't just start a project and building code on, say, Shibarium, and then it automatically works on Ethereum the way that you can on Pulse and still have those cheap gas fees, those cheap development fees. And so I think that Pulse has a very specific use case and a very specific future. Not that these other coins couldn't have some benefit in reducing some of the gas fees and the traffic in the Ethereum network.
Yeah, and I mean that's
Brendan.
And that's the main difference between something like a Shibarium and a Base versus Pulse Chain is, these are layer 2s that were built on the Ethereum network. They weren't forked. They're not their own independent system based on a copy state of what Ethereum was and then branched off and forked into its own new thing. These are built on top. So yeah, these are layer 2s. Absolutely. I want to speak real quick on what you mentioned, Brendan. Trust in the developers, I'm with you there. I don't know, but think of the following that Shiba Inu has. If I go out and talk to 10 people, on the street, or if I talk to 10 people at work, maybe one or two of them will say, oh yeah, I know what Ethereum is, or I know what Bitcoin is. But 8 out of 10 are going to say, yeah, I know what Dogecoin and I know what Shiba Inu are. Maybe not so much Bitcoin. Bitcoin, that's obviously more well known, and it's more universally understood. But like Ethereum, Solana, you talk about the other large coins that gained dominance and gained success in the last bull market. Maybe one or two of them, if I go ask 10 people, they'll know what it is. But when it comes down to Shiba Inu, you got to think of the popularity and stuff like that behind it. So can a community make it successful, even if the developers didn't put that much effort into it? And then, all of a sudden they decide, okay, well, we're going to make this thing real. And then, they have blunders along the way. Is that something that the community will still stand behind? Do they have a cultish community like other coins do? I think that's something else that you have to keep in mind when you're thinking about this sort of thing.
Yeah, Josh, actually, you're right about that. So one of the things when I was kind of looking into this is, specifically, I know that Sheeb has a good following. It's got a large following. People really do they love it, right? It's their coin. It's their meme. Here's the thing that I was seeing amongst all the FUD of what was happening with the bridge in ETH, right? People were upset and angry, as they should be, but they were reacting a lot like Hexicans were reacting, where Sheeb has is laughed at as a joke, right? It's laughed at as a joke because it is a meme, okay? And people are like, that is that real? Is that fake? And here's the sentiment from the actual community that I was getting. I was looking at them in the way that they're just so nose to the grindstone, like, hey, we are going to prove you wrong. And that was very kind of like eerie, because that's exactly what Hexicans are like, right? It's like everyone's like, Richard Hart is a scammer, blah blah blah, and Hexicans are so like, screw you, we're gonna prove you wrong, and they did until Pulse Chain came out, and now the cycle is coming anew, right? And yeah, Hexicans are going crazy, Pulsicans, I guess, whatever, but they're going crazy, like, hey, we're gonna show you just how good we are. I've been seeing the same thing with Sheep, and this is actually what's got me a little bit like, maybe I want to put a little bit more money into Shib. Maybe I want to buy a little bone. They're determined. They're determined to be taken seriously, even though they're a meme. And Jen, if you could bring up the comment that Cassie made about what a meme coin is, I would like to talk on that. So this is 100% correct. Brendan, I understand what you're saying, because it's like it's big, right? You know, Doge and Shib, they're really up there. But it will always be a meme, and you are 100% correct. Where it's like it's insanity that you can just create a meme coin, and now it's this big, right? And I almost wonder if Pepe will be something like that too. Maybe get a little position in Pepe. I'm just saying, but not financial advice. So yeah, what she says here is 100% correct. It's always going to be a meme coin because that's the way it started off, and it is. It's based off of a meme, but it's a meme that people want to have around. They want to be a part of that community, and the community is probably just laughing and having a good time. One of the major things that pisses off traditional finance and causes, you know, old grandpa to be like, oh, I'm not going to go do that crypto thing. It's magic internet money, right? Is because we come over here to the crypto space and we just start memeing, you know, the hodling, the Pepes, the to the moon, the rocket, right? And it's like, it's insanity, and there's no professionalism over here, right? Everything is just a joke and laughing and being stupid. And so, but yet we're still making more money than everybody in the stock market, right? Go figure. So yeah, I think ultimately that's kind of the big deal when it comes to. I'm starting to get a little bit bullish on Shib. I'm not even gonna lie, man, because looking at the way the community is going, the one thing I'm worried about though is the leader. The leader, he's a behind the scenes, you know, just he's got his he's not showing his face, right? He's not KYC'd, and he is very good at, you know, getting people pumped up and making memes and stuff, but he's also not really showing himself. He could rug at any time. So that's just something to kind of watch out for, right? However, it's been going on for so long at this point. Are they really going to rug? I don't know, man. I don't know.
Hey, Zenith, you had a chance to take a look at the white paper. Did you see anything on the white paper that was interesting, or you know, what are you seeing there?
So the white paper got released. It's about 36 pages long, and to be honest with you, it has a lot of buzzwords and keywords and talking about ideas. However, it doesn't give you any actual specific information about how the chain or any of the coins are going to operate. It specifically talks about, I believe it's 15 crypto problems solved by Shiba State. They provide a number of questions, whether it's like scalability and transaction fees, governance, accountability, and evolution. But to be honest, it looks a little ambitious for where it is right now. The one thing I will say, though, is that it is building itself as a layer 2 instead of a new layer 1 blockchain. Personally, I think that we're going to see the death of some layer 1s this upcoming cycle. And then eventually what's going to end up happening is that the layer 1s are going to get solidified as who are the big players for their specific purposes. After that, we're going to see the evolution of layer 2s. This could be an early stage of one of those, but right now, I think it's a little too early to tell. I'm going to have to do a little more research into all the different coins, but I will say this. As far as the meme coins go, I don't know if Shib is a terrible one to actually try to build into a legitimate coin. Specifically, I look over at Doge, and I know what we were talking about earlier with that. As long as you have the community behind it and you have a decent leader and whatnot, it's going to be a pretty big deal. I mean, it's hard to look at it and say that an $8 billion market cap coin is not a big deal. But for me, I think there still has to be some fundamentals. Specifically with Doge, I'm not trying to pick on it too much here, but it technically has an infinite supply. For me, that's a red flag and why I would stay away from a meme coin like that. But if they can figure out what maybe a little bit of a use case outside of making money, and then finding a way to ensure that their emission schedule is actually reasonable, I think you might be onto something there.
So
That's
one of
great
the
insight.
interesting. Oh,
Yeah, go ahead, Will. Go ahead.
I was just going to say, one of the interesting things with Shiba Inu, because they're being so ambitious in their white paper, and because they're also like self-recognized trash joke coin, you know, it's like they can go either way. Like they've basically just paved both futures, like that are possible for them. They either, you know, fade into nothingness, laughing and patting each other on the back and just having a jolly good time because, you know, it's nothing but a shit coin or like a a trashy meme coin at the end of the day, or they end up being successful in their ambitions. They figure out how to become useful and do all this other stuff, and then they like become like what Zenith was just saying, like an actual useful L2 that does something off into the future. So I think it's interesting that since they're a joke, but they're playing out to be ambitious. It's like you could pull the whole like it's kind of like the whole court jester thing, you know. Purpose of the court jester is to make everyone laugh and have fun, but they're actually a valuable piece like in the court to like be there to, you know, advise the king and provide value in that way. So it's like I just wanted to opine on that. I don't think it's anything useful as far as actionable information or whatever, but it's just that thought occurred to me, and so I figured I'd share it.
Well, I thought Brandon brought up a really good point. You know, at what point do you start, you know, considering this thing real, I guess? And that's the point you were trying to make, right, Brendan? Is that, you know, this thing already has a solidified market cap. This thing is already in the top 15 for coins. You know, at what point does it go from, oh, that's just a meme coin that's going to lose value to, no, this thing's going to stick around? And I completely agree with what Zenith is saying, that, you know, L1s are going to start dying off, and then we're going to have the evolution of the L2s. And I think when you have something like Base, you know, coming in and sort of being one of the front runners for that, and then you see something like what Shib is putting out, it'll be interesting to see what the landscape looks like going into this bull market and then the following cycle, and how L2s will evolve over time. Does anybody have any final thoughts before we go ahead and transition to the third story? Nope. All right. Let me get rid of this. All right. Let's talk about the third one. All right. So Fox Business came out with a report. So a new research study published by the San Francisco Federal Reserve says that Americans are burning through their savings accounts. The savings was accumulated during the COVID-19 pandemic through stimulus checks, through enhanced unemployment benefits and such during the COVID-19 pandemic. The study goes on to say that it shows that households could deplete their savings by the end of this quarter, which is super frightening. I mean, that's a super frightening statistic, really, when you think about it. This could lead to tighter it could lead to, you know, tighter financial conditions in the marketplace. It could lead to U.S. households really tamping down on what they go out and spend. It could be the end of discretionary spending, so to speak, for a lot of families. So first question that I want to ask, and I'm going to pose it to the panel, is how is this situation different from where we were 3 years ago when the COVID-19 pandemic had just started? Because what we saw then was we saw a drastic reduction in debt, and we saw savings accounts being, you know, stocked up because of all this money, but the money wasn't able to be spent. So what could this look like this time next year if all of this savings accounts, you know, throughout America are depleted and debt starts to rise even more so than it already has? Somebody come off of mute and talk to me about that real quick.
Should I? Gene, do you want to take it first, or want me to go?
All you, brother. Get after it.
So, you know, the first thing is at the start of the COVID crisis, we didn't really have interest rates, right? We were very, very low. And in fact, they cut interest rates to essentially 0%. We now have much higher interest rates right now. So we're seeing sort of the opposite effect. And we're kind of seeing a bit of a trifecta here, right? We're seeing an increase of credit card debt, the highest credit card debt that United States citizens have ever had since they've been tracking it, which isn't as long as you might think. 2, we have a reduction in savings, continued reduction in savings. In fact, I think it dropped something like 7% from the last quarter, which is a lot, right? 7% is a big reduction. in household savings and in a quarter over quarter, looking at that. And then we have the raising of interest rates. And so that's sort of, I think, a very interesting trifecta where it's very likely that the government's going to raise interest rates again in September. And therefore, again, the lag and how these policies, when they really affect the market, could really cause difficulty, increased debt, especially if we start to lose jobs. Right now, the unemployment rate is very low. The job market's very strong. And so for us to see a decrease in debt and a decrease in savings and an increase in credit card debt, while the job market is very strong, is quite scary. Because as we continue to raise interest rates, as we continue to see issues with the Chinese economy, right, they're in a very troubling situation, and they have an effect on the worldwide economy as well, because they're the second largest economy worldwide to the United States. And so we're starting to see a lot of really interesting bits and pieces of information coming together that could cause continued and prolonged issues in the market, more so than maybe we originally anticipated. And right now, I think experts expect, maybe 50-50 if we're going to see a true recession by the end of the year or into early next year. But we're starting to see some really interesting information or really interesting analysis to our economic situation that could lead us to the opposite of what we might consider our perfect storm theory in the short term. And I can touch more on that later.
Yeah, no, Brendan. So I know that they can call it a recession basically whenever they want, right? And they'll call it a recession for about a year until it becomes a depression, right? Because they've been they've been messing with the numbers and stuff. What technically makes it. As far as I'm concerned, a recession is when it gets harder, when the average family has less money to spend. They would rather try and save it up. Here's the thing that I've always kind of looked at is that inflation alone already means that you're not actually saving your money, because if your money is stagnant, you're basically just losing it, right? Because of inflation. And so kind of what's your take as far as like the pain that families are feeling right now? Like, do you think we're already in a recession, or is this kind of like, do you actually think it's important for the government to actually say we're in a recession before we're actually there?
It's a great question. I think that when the government says it's a recession, we're even worse off. It's just like, hey, there's no more even denying this or sweeping it under the rug. But I do think that there has been increased pressure on the individual person, on individual families. And that is partially due to inflation. And, the question is, how do we get out of that? And like Billy said, you have to print money. Well, the problem right now is the United States is at the highest debt it's ever had. So where can we continue to print money to get out of this? And that's another aspect that I think that you really need to take into consideration when you're saying, okay, well, how long is this downturn going to last? How much is the pressure on the individual person and the individual household going to last? If we increase interest rates, if we now start to create a worse job market, which the Fed is planning to do, they have to, if they want to get inflation down to the rates that they want to do so. So now the job market is softer, which means the unemployment rises, which means now people have even less money to spend, less money to save, more credit card debt coming to place. And, the U.S. government having no option to print more money because we're already at unprecedented levels. We're already losing our Fitch rating from AAA, which is the highest rating that you can have, down to a AA plus rating, which doesn't really matter, but it does when you put all of these factors together. They start to add up, and it does start to create more pressure. And so I don't know if we're in a recession. That's certainly a good it's certainly you could make a case that we are and have been, because we haven't had really good upside, but we could have more downside, and that's the worry.
Hey, Zena, did you have something you wanted to say?
Yeah. So I guess I had 2 points here. Firstly, to answer the question of the difference between 2019 and 2022 is that the cost of living has just gone up. Obviously, when we had COVID, everyone's demand went down because you're stuck in your house, you're not going anywhere, you're spending less. So that's why savings went up. Savings are going down now because just living is more expensive. That's really what it is. To get back to what Brendan is saying, though, is that when it comes to the Fed and the interest rate, they specifically say that inflation and the interest rate are the things that they tie together. However, there's a third rate that Brendan also mentioned that is not directly tied to it, but is greatly affected by both of those, and that is the unemployment rate. The unfortunate thing is that when they do raise the interest rate, there is going to be some correlation with the amount of unemployment that comes with it. So I can't really give you a prescriptive thing about how we're going to get out of it from here, but I can tell you that printing more money is probably not going to be the answer, because that is actually, in my opinion, one of the factors that has actually led to what we're having right now. And the major issue is just inflation.
Yeah, for sure. I mean, as soon as they start printing that, it gets us out of short term, right? It gets us out of the mess or the binder we're in short term, but then long term, they're basically just kicking the can down the road. Here's the thing that I'm looking at that is very interesting. A lot of companies, ever since COVID, right? Or, the certain bug from unspecified origin and all that. Ever since then, companies have been struggling to either get people in, and we have, according to you, Brendan, we actually have really high employment rate. My question then is, based on what it is that I'm seeing, hearing from friends, family, things like that, right? Other companies around everywhere. It seems like it's not so much. What's the best way to put this? I don't think people are working at a specific location for very long, but I think they're kind of skipping around a lot and have taken on different jobs, right? If that's the case, is that going to affect those numbers where it's like, hey, we have a really high, like, everybody's out working, all these companies are getting multiple employees. Have they even checked in a retention rate at all when it comes to employees? Like, is that even factored in at this point? Or is it just like they look at the numbers of like of like an oddball number of people who are just like, go to one company, be done with that, after 6 months go to another company, and they just keep skipping around like that? Does that actually affect it?
I mean, they mostly just look at how many people are filing for unemployment this month versus other times of the year. I don't know the deep nuances of it, to be honest, Nate, that if that's going to affect it. But yeah, anytime that you are in a job and then you get fired or you quit or whatever the case, and you join another job before you file for unemployment, then yeah, you're not going to be part of that statistic. It's going to make the job market look strong. And so what happens when you can't find that next job? That's when the unemployment rate rises. And so I think we're at that point, like you kind of alluded to a little bit, that, yeah, maybe people are bouncing around jobs right now because they can get those jobs. But what happens when these companies need to cut costs? That generally comes in the way of not being able to hire as many people. And so it's going to be harder to find that next job. And that's when we see the increase in unemployment.
Yeah, that's the thing. Actually, I'm seeing, right, is that you've got a lot of people, it seems to me like they just keep skipping around to other jobs, right? A lot of people are working, say, 2 jobs. And again, there's 2 jobs where they just keep skipping. The overall, though, people are still working, right? Okay, so there's that. The other thing is, I don't think anybody is really either able to, or maybe something changed where it's difficult to get unemployment now, where companies are being extra careful about just being able to have people file for unemployment. Because when any job you ever go to and able to get unemployment, you have to specifically like meet a certain criteria where you were fired in a certain manner, or you just happen to not be able to work in a certain manner. right? So with that being said, right, it's kind of like, kind of what's going on there,
Well, there's two parts to that, and maybe I misspoke a little bit. But just because you aren't on unemployment doesn't mean that you aren't part of the percentage of unemployed. So the first thing they look at is people that can be employed, right? So that does not include people that are on disabilities, for example. If you're on a disability, you might not have a job, but you're not counted towards the unemployment rate. And one of the things that I haven't really looked up recently, but is it easier to get disability? Are there other ways that are sort of fudging the numbers a little bit in the job market? I haven't noticed anything personally of things that I've seen or looked at, but it is a fair question. And anytime that, as Zenith said, that government prints money, it doesn't help the average person. So all of these people got $1,200 for COVID checks, and then another $600 to $1,200 after that. Well, what's $2,000 if your cost of living rises 10% every month? So now you're spending, $2,000 to $5,000 extra every year to live. So now they have not only hurt you, but not only have they not helped you, but they've actually hurt you more. And so very, very important that printing money in an uncontrolled way hurts the market, but printing money can help the market, but not when you're at the debt levels that we currently are. Unprecedented money printing.
One thing that might tie a little bit of this together is that I think we're definitely in the area of changing definitions. What I mean by that is if you look at it, the definition of what is a recession has changed, how we calculate the M2 money supply has changed, and even the unemployment rate has changed. Specifically, just because you're unemployed doesn't mean you fit into the unemployment rate. It's only actually counting people that are out there looking and actively seeking a job. So again, that might be even higher than we think it is right now, just because after we had the unknown origin bug thing crash, a lot of people didn't go back to work. Are they unemployed? Yes. Do they count the unemployment rate? No. So it's how you calculate things is happening. And then also at the same time, when it comes back to inflation, I think there might be some changing expectations with it. The goal of the Fed is to keep inflation at 2%. We just got down to 3.1% at the CPI, not this last one, but the one before it. This last one was 3.4%. It seems like it's a bit of a win, but that's only because we were looking at 10% inflation previously. Even then, that's a change in expectation to saying that we went from a 2% inflation to a 3% inflation. Yeah, we're only talking about a 1% increase. However, that's a 50% increase. Even with the base 2% inflation as it is, that means that in 25 years, money that was sitting in the bank 25 years ago is going to be worth literally half of what it was. So any increase of that is going to seriously devalue people's savings in the future, and it's going to affect the way that people can actually save money into the future as well.
It's extremely important because you brought up a good point that we're in a period of changing definitions. So when, in this period, the only thing that we can really do is we can take a look back at history. We can take a look down memory lane. So I'm going to give, somewhat of a monologue here, and that's exactly what we're going to do. So in the 60s and 70s, we had the stagflation period, thanks to excessive government spending on Vietnam and social issues. The U.S. household wasn't necessarily in a big credit deficit. It was the U.S. government overspending, right? But then we take a look at the 2008, 2009 housing crash, and it was American households that were in debt due to, subprime mortgages and predatory lending and sort of things. The government was still spending wildly, but it wasn't spending wildly in aspect to where we are right now. We still had things like the Iraq War, the Afghanistan War, and such going on. But we certainly weren't sending out, $1,200 checks to every single taxpayer that, was going on. But what I really want to take a look at, what really scares me, is if we take a look at the Great Depression in the late 1920s. So what we had there is, 10 years prior, we had just finished World War I. Europe was devastated with war. We had the German government was going through hyperinflation. Europe in general was just destroyed from the war. America was prosperous and America was thriving. And America goes through the period of the 1920s pretty much buying stocks on credit. It was stocks on credit through the entire 1920s period until we get to 1928, 1929, when the stock market crashes and then the world gets into the Great Depression. The world was already in a bad place. It was just America was propping everything up through credit, buying the stocks. So what we saw in Germany was Germany went through hyperinflation, and then we get into the mid 1920s and America starts buying, and American households start leveraging credit and buying in the stock market and stuff like that with borrowed money. And more money starts to roll into Europe, and certain places in Europe start to get better. And that's one of the reasons that Adolf Hitler came to power, is because he predicted that once America's money gets pulled away from Germany, Germany is going to go back to that hyperinflation. All right. And when that happened, when the stock market crashed, it sent Germany back into a problem. And that's one of the reasons that led to, him being able to say, hey, everybody needs to listen to me. I predicted this. I said that this would happen. So if we take a look at where the world was back in the late 1900s into the 1920s, the world in itself, the vast majority of the world was not in a good place. It was just America that was in a good place. And if we look at where the world is now, COVID had a very devastating impact on the entire world when it comes to how governments responded and government spending. So when we think about, the inflation that's going on over in Europe and in other countries versus the United States, we have higher inflation rates. We got a lot of defaults going on in other parts of the country. It might not be hitting America that hard right now, but when we take a look at what's going on with savings accounts being depleted and Americans starting to spend more and more money, plus we take into account that we have rapid rise in interest rates. We have stubborn or sticky inflation right now it's probably too early to say that it's stubborn or sticky. We'll still need another 3 to 6 months to see if this interest rate can come down. But we might be looking at stubborn or sticky inflation. We have a lagging unemployment rate. So the employment rate is still very low. All right. The employment rate hasn't caught up to that point yet. And we got Americans that are depleting their savings and they're adding, millions and trillions of dollars in debt are being added to the American household. So, Brendan, I want to ask you a question real quick. When you think of all that, what we've talked a lot about the perfect storm theory when it comes to crypto. I want to know what your opinion is on an alternate perfect storm theory when it comes to the U.S. economy, and how could this be a period of time that we're looking at that beats the 1970s, the stagflation period, or could it stick America back into a depression like the 20s and the 30s period? What do you think on that aspect?
Yeah, it's a fantastic question, Josh. I think that the first thing I want to mention is, hey, what generally causes recessions? There are generally what we might consider 4 main areas that lead us to a recession. First are supply shocks. We saw supply shocks a lot during COVID, right? Factories had to shut down, commodities couldn't get to people. And so there was an issue with supply. You couldn't get what you needed. And therefore, that causes downward pressure on the market. We also saw supply shocks during the Ukraine, or we see, I should say, supply shocks during the Ukraine and Russian war. Things like that can continue to cause issues as well. So will we see more supply shocks in the future? That's a question you need to ask yourself. Another one, which we've kind of touched on, is mistimed or essentially poor market transition by the Fed. So what does that mean? Okay, we were late to start raising interest rates because the Fed originally said that we were in transitory inflation and that will just come down naturally. Well, we know they were dead wrong about that. They've pivoted into Chair Powell's credit. He seems to care less about the pressure being put on him by the government and wants to do the right thing to get inflation down, be that true or not. But we know that was mismanagement of the market. And so will that play a role, and will continued raising of interest rates also play a role? So essentially mismanagement by the Fed can cause recessions. We have also housing markets, right? In the past, we had the bubbles, right? You talked about the bubbles of essentially buying debt, buying stocks off debt. We had the bubble of the housing market and what helped cause the great recession, right? Just really, really long period of downturn in 2007 to 2008 and moving forward. And we really haven't seen an issue with the housing market yet. We've seen some slowdown, but we haven't seen any real reduction in the housing market. And so as we continue to raise interest rates, as Americans continue to deplete their savings and increase their debt, will they be able to continue to pay their mortgages? We've already seen an issue in China where their largest development company, property company, is having a lot of issues. Just filed for restructuring in Chapter 15 bankruptcy because they have locations here in the United States, they have locations in the UK, they have locations in China. And so we're seeing issues with the big companies when it comes to the housing market, but we haven't seen a downturn in the housing market. So does interest rates and depleting savings cause people to not be able to pay their mortgage rates? And then we start to see more defaults in the housing market. And maybe we hadn't seen defaults like we would have in the past because of all this extra money that people were able to save during COVID. And it's interesting that while we've had a really high inflation, that we've had some issues with stagnant growth of the GDP, we haven't seen a downturn in people being able to pay their mortgages. In fact, it's below the average of defaults that was pre-COVID. And that's, again, because people were able to bank and save a lot of money. But now that we're starting to see a depletion of that savings, my personal opinion is that we could very much start to see an increase in defaults, and therefore we could start to see more downward pressure on the housing market. And then the fourth thing are financial crises. So supply shocks, which we've seen, mistimed or potentially mistakes in policy judgments, which we've seen. We haven't seen a housing market crash, but that could be coming. We're seeing an incredible issue with the Chinese economy. And again, they're the second largest economy in the world. And part of the perfect storm theory is them being able to invest a lot into crypto. The alternative to that would be continued issues with the Chinese economy. And therefore, it's going to take longer for them to be able to invest their deep pockets into crypto. If we continue to see a downtrend, then it doesn't mean that there won't be a perfect storm theory for crypto. I still think that is going to happen at some point in the future. But hey, you asked me a question. Could we see a perfect storm of a problematic economy, sorry, I have no idea what was just randomly playing in my background. But could we see a problematic with our economy? Yeah. And in fact, we could be starting to see a perfect storm theory that honestly, if you asked me a month ago, I may not have noticed. And part of it was, I did not take into account all of the extra savings that people had amassed during COVID because they weren't allowed to spend their money. They weren't allowed to go out. So they were made to save. And so these savings have kept us afloat from really seeing downward pressures of the economy and downward pressures of the increased interest rates. So as we continue to deplete those funds, as we continue to put more money on our credit cards, as we continue to see increased interest rates and maybe people defaulting on their loans, we could see a much bigger downturn. We could see I don't know if it's going to be worse than the 70s stagflation. I don't know if it's going to be as long as the Great Recession, not Great Depression, Great Recession of 2008. But we can have a very unique situations on our hands because of very poor policies during COVID. And I'm not saying policies of letting people stay. I'm saying policies more of printing money, policies that are creating unique issues. So we went from printing money during COVID to now printing money during the war in Ukraine. So people were saved by their savings that they don't have anymore. So yeah, we could really start to see a perfect storm theory in the other way before we get that perfect storm theory in the future for crypto. So very interesting, Josh. And I'm glad you asked me that question because I've been starting to notice that a little bit. It's been in the back of my mind, but researching it a bit more over this past week and, up and leading up into this show has really put some interesting thoughts into my mind.
Nate, do you have another thought you wanted to bring up?
Yeah. So with all that being said, right, can you give me just a quick sort of like TLDR? What does that mean overall of kind of the consensus of everything you said there? Give me just that TLDR of that.
Yeah, sure. It means that we're going to have a longer, essentially, time where the market is not going to move up. We are going to see a little bit of a decrease in the GDP. We're going to see people default on their loans. And therefore, in the short term, we could potentially see more downside leading through the rest of the year. So I don't know how much that's going to translate to the markets, but it certainly could. And that's why we have to be a little bit careful about being too bullish at the beginning of this bull market, because I still think that, yeah, we're probably in the beginning of a bull market, but even in the beginning of a bull market, we see volatility. And we have this very interesting macroeconomic scenario that you don't normally see at the beginning of bull markets that I think is going to have a lot of pressure and make it a little bit longer before we start to see that sort of rampant move up. But always be a little careful.
And that's kind of what I've been kind of observing that a little bit, where it's kind of like based on a lot of things that are happening, we should be really like moving up a lot. And in truth, if you are looking at Bitcoin's chart, it has been moving up, right? But here's the thing, right? Is that we're still on the macro section, right? With all the other markets going on, there's a lot of pain. There's a lot of pain, and there's a lot more to come, especially when it comes to the real estate, right? And so this isn't gonna be a normal, like, suddenly, bam, there you shoot off, right? It's gonna take a bit of time before we actually get there. And so a lot of people are sitting there thinking, and this is kind of where my theory as far as like the whole Fed pivot goes, where we're gonna get one final major crash, which we could hit, 18,000 Bitcoin again, right? That's gonna we already dropped down 25 that quickly, right? It could happen again for the pivot, and I think that's when sort of the final warning of, hey, you need to dump out that dry powder. You need to make sure you're set, right? Because it's after that I believe what's going to end up happening is that everything is going to start, instead of like, hey, we're applying for this, hey, we think we're going to try and do this, we're going to let Hong Kong kind of do its thing and see if it works out before we do anything. All of these things in the perfect storm theory are going to start. Okay, now we're going to push the button. Okay, we're going to turn on the engine. We're actually going to go do what it is that we're kind of speculating at. And I think that's going to happen when the Fed pivots and all of these large company investors are like, you know what? Our bags are packed well enough. That's when things are going to really spike, right? Really highly. So with that being said, the other thing though, Brandon, is that with such pain and the opportunities, I guess you could say, for hyperinflation to be taken over, the idea of money flight. Okay, so I want to add in with that, right? I want to add in another aspect of that. There's a lot of boomer Gen Z or Gen X money that is going to be moving over to the millennials and Gen Z now. Okay, it's going to be a wealth transfer. Us millennials, right, and the Gen Zers, we're kind of done with those old people, right? We really don't like that type of thing, and the main place that we're going to is crypto, because we already know that our futures have basically been stolen from us. for the way that the traditional financial system has been set up. And so ultimately what I'm kind of seeing happening is that we are going to be hitting a certain point where all of that money is going to start pouring into possibly crypto, maybe it might be something else, but it's definitely going to be pouring in. It's going to be quite an incredible an amount that is automatically flying in. And when people ask, hey, where's all this money coming from, right? I think it's going to be because of the overall wealth transfer that's going to be happening within the next 10 years.
Another aspect that you have to consider is this is also the first cycle where we've ever had interest rates at 5%. It's also the first cycle where we've ever had interest rates at 4%. It's also, I can continue this until I get down to 1 or 0. You know, think about it. Crypto was born out of the great financial crisis. We've had 0% interest rates through 2013, 2015, 2017. 2021, you know, it was 0% interest rates. This is the first time that we've seen interest rates that are above that. So how could that impact this upcoming bull cycle? You know, that thought just popped into my head. Does anybody have any initial feedback on that sort of question? Because that's something, honestly, that's been on my mind a lot over the last couple months, is how is the market going to react differently to higher interest rates? And, you know, is it going to stifle it? Is it going to set it back? Is it going to, you know, cause the devastation of a lot of coins, even more so than a normal bear market would? You know, what kind of impact could this have?
So as far as the interest rates go, the last bull cycle we had happened when, like you said, we were at effectively 0% interest rate. It was the era of free tendies, so to speak. That means that we had a pretty good bull run, I'd argue. For this next upcoming one with increased interest rates, I'd argue because you have that increase, you might see less of an overall increase in the total bull market. And it might not go as high as some people think, might be a little bit stunted, might even start to shift a little bit early into that 4-year cycle and drop down into the next bear market. But that's just my personal take.
Here's what I'm looking at, right? And this is something that I've been super like, I can see where we could have, I guess what you might call a super cycle, right? And this is going to be one of those times. There's so many aspects of almost mass adoption that is coming in right now, where crypto will have no choice but to go parabolic, absolutely insane. Maybe one of the biggest bull runs we've ever had. But then when you look at things like things that are supposed to be holding us down, right? Which would be, you know, like the interest rates and all that. And it's like, okay, well, we also have this going on now too, though. And so it's like, there's, it's funny because there's no real definition of what the next bull cycle could possibly do. And so one theory that I've kind of been sort of speculating on is the very real possibility that this particular bull cycle might be an actual a little bit lower of a bull cycle. And everyone's kind of like, oh shit, you know, looks like crypto is maybe going down the tank, you know, it's not as good, blah, blah, blah. Maybe people start losing some, and then maybe we have a lower bear market, right, than we had this year. But then the next cycle after that, there's a very real possibility that that's the one where this perfect storm theory truly kicks into gear. And then that's the one, that'll be the one, the final one, you know, that'll be the one that really skyrockets. And so here, like at that point in time, right, you got to be thinking, okay, well, what am I going to be doing, right? So what do I do? Okay, number one, accumulate your coins. Get those coins, okay, sell at the top. Don't be afraid if you didn't sell directly at the top, but somewhere near there, right? And hey, maybe it's not as much as you were looking for, but that's the reason why I have this the step system, where it's like I've got, you know, it's just fine, the expected, the done really good, and then the moonshot, right? Okay, so if I end up below what I expected, hey, at least I still got some pretty good money, right? Okay, now here's the other thing. If it doesn't do as good this cycle, that means that everything that's happening right now, you need to be looking at the next cycle, right? Because that next cycle, this is going, you can only keep crypto down for so long. Only so much of this can be tamped down until they finally like pull the ripcord and just let it go, you know? And when they finally do, whether that happens this cycle or next cycle, it's going to take off, right? This mass adoption is what's going to cause everything to really take off, right? And it's going to be happening either this cycle or next cycle. That's what I'm looking at.
Got a question for the panel. Will, I want to start with you, and I want to go to Zenith, then Brendan, then Nate. All I need is a one-word answer. At this point in time, is Bitcoin too big to fail?
No.
Yes.
My turn? Yes.
Because of companies and mass adoption clearly coming in? Yes.
That's 12 words.
Screw you, Brendan.
Okay, so Will, you and I want you and Zenith to talk about it. Have a 2 or 3 minute conversation, and Will, I want to know why you think no, and Zenith, I want to know why you think yes.
All right, Will, lead us off.
Just my one, contrarian, right? Do I think it's going to fail? Probably not. Is it possible it could fail? I'm sure there's something. Very unlikely. But yeah, like I'm not discounting the possibility. Do I think it's probable? No. Is it possible? Yeah. I don't know what it would take to cause Bitcoin to fail. Complete internet wipeout everywhere, and also all the nodes are gone. The sun exploding, things like that. Nothing really practical, nothing really that we can do to stop it. What would be really shitty is if like Satoshi Nakamoto turned out to be Hunter Biden like this whole time. That would probably cause Bitcoin to fail. Maybe not. I don't know. If those coins got dumped, whole bunch of things. I'm not exactly the world's best speculator, but I know that nothing lasts forever. Whether it's ancient Rome or whether it's a concrete building, or whether it's the sun. Everything's going to die at some point. It's a question of what does it take to bring it down, and also, is that time span relevant to the people asking the question? Do I think I'm going to ever see the end of Bitcoin? Absolutely not. I think it's here to stay. Is it possible? I mean, just like I know that I know some things, I know that I don't know many things, and then there's a whole bunch of shit way off in this other category that I don't even know that I don't know about. So I can't discount that third category. And so just it's, I guess, yes in spirit, but no on technicality.
I got to say, Will, I think you're technically correct that, yes, if we somehow find a way to cut off the power to the entire planet, yeah, the system's going to die because no one's going to be validating or mining or anything. So we'll go away there. But assuming we're not going to see the inevitable heat death of the universe or society, I think it's going to keep going, because I think it has gotten to that point where it is large enough and it has enough buy-in from people that there will always be people that keep it going. Personally, I think that Bitcoin is a very unique cryptocurrency in the fact that nobody knows who Satoshi is. It is possible to alter the Bitcoin code. However, it really has not been done over the 15 years that we've been out here. The point is that Bitcoin has enough of that decentralization that all cryptos wish to have, despite having a founder and having someone with admin keys or something, that Bitcoin is going to keep it going. People have talked about quantum computing being a very big issue for all kinds of encryption. However, if you look at the actual encryption that Bitcoin is off of, Bitcoin is, I believe, to be quantum safe, which is that quantum computing is not going to destroy the encryption. Therefore, I think we're going to be able to survive at least the next iteration of cryptography. And then also at the same time, we're only going to get more and more adoption. The point of Bitcoin was to be a store of value. I know originally everyone was hoping that it would be actually a payment method, but gas fees obviously are going to hinder that into the future. And that's where we thankfully have other cryptos to come in, like Ethereum and Pulse Chain, where you can actually build on it and actually send it a lot easier. But as far as Bitcoin goes, I do believe it has that critical mass and it has enough interested parties to show that it's going to last. And you can even look at the case example of when China banned Bitcoin. Did it ban all of it? No, there are ways to get around it. But at the same time, it didn't kill it. It's still there. And eventually, the Chinese government came around to saying, yeah, Bitcoin trading is okay again. That's what I got.
I like it. All right.
Want to go last, Brendan?
You want me to go? Sure.
Yeah, what's your thoughts on that?
Look, I mean, Bitcoin was set to fail in the beginning. I mean, we built something that, something was built that we have no idea how it lasted to where it is today, how it started to create adoption, not just from a personal level, but now institutional level, government level. When governments, institutions start getting involved, it's very hard for something to fully fail because there's so much money and so many people riding on its success. And so I think early on, I said I had an opportunity to buy Bitcoin under $10, under $5, around $5 in like 2011. 2012, I had no idea what it was. And the people that were telling me I should buy it didn't really have good reasons to, other than I should just buy it. And, you know, if you asked me back then, I would have said I have no idea how this fake stuff that you're creating a currency out of thin air on a computer can be real. But now that I understand it, now that the world understands it to an extent, right, a small percentage still, and now that institutions and government have been involved, I find it very challenging to see how Bitcoin can fail. And, you know, yeah, I guess if the sun explodes the earth, Bitcoin's going to fail, but it doesn't matter at that point because we're not here anyway. So, yeah, I think it's too big to fail. I think once you get institutions and governments involved, they start to control it, and therefore they can't let it fail because they're too highly invested.
And see, that right there is the reason why I think it's too big to fail, because at this point in time, exactly as you said there, Brendan, large companies are getting into it now. There is starting to get mass adoption now. It has been accepted as an actual currency. And it's a popular one at that, right? Or decently popular, right? So again, you know, unless we're getting something like a solar coronal mass extinction event, right? No, it's here to stay, and it's going to be staying. I don't know how on earth even. Quite frankly, I think Bitcoin itself is just going to be sticking around. Like, I don't see any way, aside from something catastrophic, right? Could it actually go down? And I think the world is kind of realizing this as well, just how it's able to hold up. And even then, right? If you go back to our bear market with all of the destruction of everything going on, all the bank failures going on, everything that's just the world is coming to an end, right? And Bitcoin is still sitting there at $15,000 per coin. Like, oh man, it's really strong. And this is why I said it before, is like they've been sitting, or crypto's been sitting at this one strong point of just always wanting to go up. And I think these large companies, investors, you know, the real money in the world are realizing it, and they're realizing just how powerful it is. And so that's the reason why they're tamping it down. They're keeping it. They're like, "Are you straight up?" You know, like that, right? They don't want it to take off yet. They want to get their bags first. And I think that's what we're witnessing as of right now. So, alrighty. So that's our show, I guess. One thing I do want to point out here for sure is that, like, hey, guys, you need to be joining our Telegram group, because I mean, we got people like Zenith in there, right? This guy is like super smart, and we're able to have these intelligent conversations with each other on a constant basis in there. It's for free, like, for real. It's one of the best Telegram groups that are out there. You can legitimately make money out there. I know Niles, Billy, and I were doing some some degenerate trading, and I ended up actually doubling. I doubled my DAI, so the stablecoin DAI. I doubled my position in it by trading it with DAI on Pulse. I made a 2x with a stablecoin trading with another stablecoin. All right, that's pretty degenerate, and I happened to do it, and I got lucky, I'll say this time, but you know, it worked out, and we were able to do that because of what was happening in our conversations. So let's do it.
Hey, Nate, real quick. Will, I want to give you the opportunity. You said you had something that you wanted to throw in. Go ahead.
Yeah, I got one more thing. So, and this doesn't necessarily has to do with Bitcoin being too big to fail, but that doesn't necessarily mean that there won't be something bigger and Bitcoin will become obsolete. I think that that's a very real possibility. Is Bitcoin's going to be pushed to the back burner, much like the tractor pushed the horse-drawn plow back, much like, you know, the gun pushed back the spear. Eventually, things get turned into obsolescence. So that was just my final thought, is there is going to be something that's better than Bitcoin. Like people, and it doesn't even have to like be functionally better. People just need to think it's better, right? So eventually, like people lose their attention span with something, they get bored with something, even if it's like as fantastic and great as Bitcoin. Like nothing lasts forever is my ultimate point there. So it's just a time scale of like, when is the next coolest thing going to be invented, and how long is it going to take us to get there for that question, or for my point to even be relevant? That's all I got. We doing
Shiny
close-ups now?
keys, right? The shiny thing. It's the next shiny thing.
Yeah, we'll get to closing here in a second. Yeah, I mean, look, I as far as mine, I'm not going to say anything new than what the guys already said. You know, there's too much institutional money, and I think that even if we were to get into a situation where we had a strong economic downfall, a prolonged recession, I would just think that would bolster the use case for cryptocurrency. So, you know, would it take an initial haircut? Absolutely. You know, if we get to a point to where, you know, the government's coming out and openly admitting that we're in a recession, and the housing market starts to tank again, and unemployment all of a sudden shoots up to 5%, 7%, 8%. Yeah, absolutely. Bitcoin's going to take a haircut. But I think, you know, another way of what Nate was saying prior is it's only going to bolster the use case for it, which will then lead to, you know, even stronger growth and even stronger adoption. So, yes, I would agree, but absolutely, Will, I agree with what you're saying. Bitcoin itself, no, it's not too big to fail, but maybe, I guess, the idea of Bitcoin or the idea of cryptocurrency is not too big to fail at this point. But yeah, so yeah, let's go ahead and go into closing. So Brendan, kick it off, and then kick it over to Nate, and then Nate, go ahead and kick it over to Will, and then I'll close it out.
Sure. Well, first of all, I just want to thank everybody for joining us today. You know, as always, I really enjoy being on this and sharing my, you know, expertise and my information on these topics. And, you know, we're always learning. Everyone's constantly learning. If you're not paying attention, if you're not trying to better yourself, if you're not trying to learn, then you're just going to be stagnant, like the U.S. economy currently. Ooh. No, I didn't mean that, but I did mean that. No, but thank you all. We have a lot of cool stuff coming up. I'm currently working on some potential live shows. You know, we're going to potentially cover some conferences in the future, Cardano Summit, Bitcoin Conference. So we want to start bringing real-time information to you, not just from a news standpoint, but from conference standpoint as well. So we have a lot of growth that we want to do in the future, just like Shibarium has. They want to grow. But we think that we have a really good platform here. We have a really good community, and we're going to continue to try to grow that so we can help as many people as possible. We are going to, you know, we all work full-time jobs too, but we are going to continue to widen our reach. We're going to have more platforms that you're going to be able to listen to us on in the future, Apple Podcasts, in the future, Spotify. And those are things that we have cooking in the oven. It's just a matter of us getting them completed. So keeping your eyes out and ears out for that. But again, just thank you. And we're excited to just bring you what we consider important information, current, so that you can stay up to date. And thank you all. Great information today. Zenith, thanks for joining, buddy.
Yeah, thanks for having me, gentlemen. Happy to be here. This is a excellent way to reach out and talk to some more folks. So thanks again for having me.
Right on. Yeah, and like Zenith, you're a smart guy. Really, it's kind of interesting because we do kind of try and stay away from the leveraging as much as we can, futures and all that. So I've kind of written it off as a nothing burger. So I've never really researched into it, but I'm not gonna lie, I was actually learning quite a bit from you talking there, and I'm like, oh man, he's smart. But then again, I mean, like I was already saying, right? Our Telegram group, we help cover each other's bases. Like you can't, as a human being, you literally cannot know everything. You can have a little bit. You can be like extremely smart, have a little bit of everything, but you can never be that expert in everything. Which is why we, as community creatures, help each other out. We cover each other's bases. We watch out for each other. I mean, when Jay and Josh are going off on some weird, technical analysis, and I'm like, okay, sure. What I'm seeing is it kind of goes up there and it goes down there, and it looks like maybe there's some kind of resistance there. It's like, okay, I sound like an idiot, but at least I am seeing it correctly. And I get this from continually talking from these people, right? And so if you want to expand that knowledge yourself, yeah, go ahead, join up with our Telegram, right at the description and everything. Just go ahead, click it in. You're all good. Personally, I've got a lot of things coming up. Tracker, Jeff and I, we're doing what we always do. We're going to be going into, we're closing out the LPing series, I guess you could call it. It's kind of turned into, and we're going to be going into GameFi, as well as there's also some conspiracy theory type things that we kind of want to expand out into a little bit. And it would be crypto related, but it's going to be more on like the how crypto relates to actually living and relates to the governments and stuff, as far as like states and countries go and all that. So it's going to be very interesting because we've been kind of just talking back and forth, and it's getting to the point now where it's like, maybe we should record some of this, at least put it out there. If you guys enjoy it, we'll continue to make more, obviously. But yeah, so look forward to that for the incoming future. So yeah, Will, what you got?
So one thing I started thinking about ever since I interviewed Zenith down over in Las Vegas, I came to the realization that we have a pretty large community in our Telegram group, and I travel all around the States for work doing TV towers and stuff anyway. So I'm going to start posting my travel to and from destinations in the Telegram chat. And if I see anybody that's like on the way, or anyone's like, hey, yo, fucking swing by over this way and fucking we'll have a chat, I'd love to just like interview you guys, see what's up, ask around, like maybe start a whole little subcategory on the channel where I just talk with the fellow degens on the round table that join us in the group or anything. So other than that, if you guys want to see what I'm doing, you can catch me outside. How about that? Follow my socials, they're down in the description. And Mr. Taint, why don't you go ahead and close us out, bud?
Yeah, man, dude, that's an awesome idea. That is an awesome idea. I think you should definitely do that.
I thought about that like 2 minutes ago. Like it's a
great idea, dude. You should definitely do it. I like that idea a lot. That'd be super cool. But as far as for me, you, me, and Zenith will get on a call either this week or next week. We'll start talking about the DR insights that we want to do. Zenith, absolutely awesome having you on the show. Like I said, dude, don't leave the studio, just hang out when we end the broadcast. But it was great having you on the show. We appreciate the insight. Thank you very much. Want to give a special thanks to Jen behind the scenes. Jen, awesome job tonight. Thank you so much. Yep, we got Walrus coming up on Wednesday, so make sure you guys are tuned in here 8 o'clock Eastern on Wednesday for Walrus. We're going to have him live in studio. That's going to be hosted by Jeff, and we're going to have a special DJ and Roundtable episode coming up on Wednesday nights. Outside of that, we will be back here 8 o'clock on Sunday night. Make sure, if you guys haven't already, you guys hit that like button. Make sure you guys subscribe to the channel. Make sure you guys comment on the video and make sure you guys hit that notification bell. Join our Telegram, like Nate says, and all the other guys say. It's full of knowledge. The channel's constantly growing. Also in the link description, you guys will be able to find our social medias, both the DGen Roundtable and our individual social medias. So definitely click on those and follow us on social media. So with that being said, we will see you guys back here at 8 o'clock on Wednesday nights. We will have Walrus. So if you guys have any liquid loans related questions, make sure you bring those. It's going to be a lot of fun, a good time. But Wednesday night will be the next time we're here. So with that being said, we're going to go ahead and close out. Thank you guys so much for watching the show with us. For those that are live, thank you so much. For those that catch us on the replay, we hopefully will see you Wednesday night at 8 o'clock. So with that being said, everyone have a good night. We'll catch you guys next time.